So yes, thank you everyone for coming. I'm going to start chatting a little bit about what's going on today because I want to talk about biases and how they can really derail us from a strong trade strategy. You guys know me. My name is Coach Becky. I am here on Tuesday afternoons at market close to talk psychology specifically because even the best strategies and the best view of the market, they're not the whole picture of being a consistently profitable trader. That's just kind of the truth. So let's get into it. It's going to be all about different biases that we need to cover. Okay, so today specifically, there are 3 different biases that I kind of wanted to talk about because I was thinking you hear these mentioned in different conversations around, well, life in general, but specifically trading, because they're a factor. A lot of us have these. They're part of our psychology. They're part of how we've been raised, how we were taught the markets, what we know about the world and what we think we know, how we think we can gauge things, and the kind of subconscious tracks that our mind will go down without necessarily our permission. And that's what I want us to kind of shine the light on, of the parts of the rabbit holes that our brain can take us down without being a part of a strong strategy. And so 3 different ones, as I said: recency, hindsight, and confirmation. But I want to kind of break out each one individually and talk about what specifically it is so that we all kind of have a clear understanding of them, and then what we can do to counteract them essentially in order to be the most steady trader that we can be. So let's start with recency. All right, who has heard of this recency bias? Anybody? This one is, I think, slightly less known than the other 2. Yep. Okay. It's a real thing, and it's definitely a real part of trading. Okay. So it's basically this comment here: the most recent thing that happened feels like the thing most likely to happen again. So you think that just because you just saw this thing and it was a big deal, it just happened, it's very strong, such as today. Today we saw a very large bullish engulfing daily candle. So maybe that's going to happen tomorrow. Maybe it would make us think, okay, bulls are in charge, it's going to fly. That is an example of recency bias because today is what is in our mind for the daily pattern, right? So our brain has this tendency to outweigh recent events and underweigh everything else, even when larger database tells a different story. So if you have like a way of viewing anything that pulls in multiple different factors and data sources and information and real-time situation right in front of you, in a given moment, your mind can pull to the most recent information that just printed and give it more weight. Such as if you're doing a coin flip, and if it's a standard coin, that it's 50-50. You could flip it, could land any kind of way. But if it lands on heads 5 times in a row, and you're like, what is happening? Maybe this coin is like actually not a normal coin. Maybe it's weighted in a way that it just prefers to land on heads. That is recency bias because the recent is more representative of what is most likely to happen. Same thing with trading. You see a certain trend or a pattern play out, you think that's going to continue forever. Yesterday, we were talking about how we are still breaking lows. It was a massive bearish energy all day long, and that is what's been going on for weeks. So are we going to have another bearish day? Well, that's certainly, bears are powerful right now. And that's how so many of us can really get in a difficult situation as traders, because this is what's been going on for a long time now. It's a well-established situation. Of course, it will continue. That's the dominant force. But if you're not counterbalancing that with nothing ever is an of course. That today was a beautiful example for me to pull into this conversation today. Worked out for me. I know there's opportunities on all sides, though. This is some nice patterns today. This market is abundant. Okay, so why is this a risk for day traders? I sort of danced around it a little bit, but let me get specific with it. Because recency bias quietly distorts your read of the market, often right when it matters the most, because it can become a real strong energy and force in your mind because something seems like a very powerful move. Well, that could be right before it's setting up for a flip. And this can result in these certain outcomes as a trader, such as chasing momentum. So after a strong trending session, you assume the move continues and you enter late, right before the reversal. That is a situation such as yesterday when the strong was so strong in a downward momentum that maybe you did enter an overnight short trade, or you bought some puts at the end of the day yesterday, just chasing that momentum. It's kind of dangerous. Also, oversizing after wins. So this is about like the ego boost that a wins can give you, because a hot streak will make you overconfident. It will make the risk feel negligible because you're on a roll. And so you can kind of devalue the fact that your roll can end at any point, given the reality of probabilities as a trader. And so you could potentially increase your size and your leverage at exactly the wrong moment towards the peak of a winning streak, and then take a really hard, humbling loss. Definitely a risk there. And then paralysis after losses. So a string of losing trades can make every valid set look like a trap. And so in that situation, you could hesitate or skip high quality entries entirely because you think, I just am losing. I don't even know if I know how to trade anymore. I don't even know if I know what a good setup is. You can start second guessing things and no longer execute on a strategy. If you were just in the situation where maybe your strategy has a 60% win rate and you just had 4 or 5 losses, doesn't necessarily mean that you are not having a strong system. It just means most recently you've been hitting the losses. Oh no. I don't want to poke anyone's soft spots in their psychology, but I think just shining the light on all the ways that our mind could be working against us, and how I really want to always choose to catch that in real time. If I can catch these biases in myself in real time and then think calmly and rationally about them and pull myself back from these, I think it's powerful. So that is like a big part of why I was like, this would be a great conversation for us, because I do think that these are absolute true paths that our mind can take us down without our permission. And the more we can harness our brain for good versus evil and control versus lack of control, we'll be steadier and our outcomes will be more consistent from it. So how can we manage this one, right? There's a couple different ways, but basically you want to be able to see the big picture. So you need to be able to zoom out and think about the big picture, right? A larger time frame of a trend and how there are moves in both directions in a trend, or in your personal trading trajectory. If you are thinking about a trend in terms of your wins and losses, think about how you do have wins wrapped up into the losses all over the place. And so that is a normal kind of ebb and flow of a trader's journey, especially in the beginning. So it's a great stress reliever is 5 contracts. Yeah. Okay, so zoom out, right? And consider all of the data. Also, trust the plan, which is so important. And then log everything. So we've talked about journaling in a lot of my episodes too, because there really is so much power in that. So basically what this looks like as a strategy for recency bias is a structured context to what you are doing, and to have a set trading plan that is what you look for to enter a trade, how you manage it, what you do with it when it presents for you. So you want to zoom out on your data and then lean into your rules and your strategy, your playbook, your specific entry and exit criteria, but then also monitor yourself. So check your emotional temperature before every session, and only really try to engage if you are steady and you are calm and reasonable and not kind of extra energy in any kind of direction. And then also remember the probabilities of your trading system and respecting that variance, because there aren't trading strategies that are 100% win rate. That's just not very realistic, especially in your first couple of years of trading, because there's a lot of fine tuning, and using a system through multiple types of markets will really create the strongest trader in you, because you will fine tune it over time. And so by recognizing that that is a big picture, long project, and there's going to be some variance in that, you can kind of remember that there's going to be ups and downs and alternating, and to trust one thing endlessly because it's what's been going on most recently is not fair, and it's not realistic in the actual highs and lows of a trader's journey, as well as the market and the strategy. So that one is recency bias. That's where the most recent situation holds a lot of power for you, and you maybe want to carry it forward with more weight than it deserves, instead of remaining objective. And remaining objective as a trader and as an entrepreneur, because trading is your business, super powerful, and staying more steady. Okay, so hindsight bias is next. I feel like everyone does this. I feel like this one is really common, and in all things in life, everyone knows this one, right? Of course, that's what happened. I knew it was going to happen that way the whole time. I knew this was going to happen. I knew that today was going to be a giant bullish engulfing candle, because yesterday I just gave that really big wick on top, and there was intent, and we just made a new low, and we were in support. But yesterday, when we were falling to the depths of hell with no stop, maybe I didn't think that way, right? But after it printed, of course I knew it was going to happen. Well, hindsight bias is tricky because it's not necessarily factual. You can spin that. We can spin that in our own minds and then give it different weight than what it might deserve. Like this analogy here, right? After the final whistle blows, everyone at the sports bar knew that the underdog was going to pull out that win. But if you look at the way that they were talking and joking and horsing around before, that's not necessarily true. It's a different story before the data prints versus after. Yes, that hurts a lot, right? It does blow accounts because it can give you so much regret and anxiety and fear and concern of like, well, of course I knew that. Why didn't I do it? And that can create such a negative vibe in your psychology, in your brain, in your heart, in your energy. And sitting in that negativity is really like a little bit of a toxicity in your system because that clouds your judgment and it hurts you in terms of remaining patient and peaceful and trusting your system. And if you are on a losing streak, sucking up the data, asking questions, figuring out what you need to catch so that you can stop it. But if you're just so dang frustrated because you just knew it was going to happen and you keep over leveraging at the wrong point or what have you, it's harder to make each day count. Yeah, over leveraging is so dangerous because it's so easy to get upside down in too much size and then not having a reasonable stop that protects your account. And I think that is super dangerous when you're leaning into a bias because it can make you feel, if you can see my air quotes, which I'm recording, but if you feel so strongly about a position and a direction and a trade plan that you do take on more size or you trade it by not waiting for a pullback, you don't nail your entry, you just chase. You can really get in a lot of trouble if you're chasing with high leverage because of any one of these biases. Yeah, dude, it happens. Enlightened. That's why this conversation, I was like, these biasy traps that our brains will take us on is very real. And so with the hindsight biasy, it's like after an event occurs, you believe that you predicted it all along. But in this situation, the reason why it is a bias is that it reshapes your memory of this situation. It makes it so much like you knew it was going to happen. Why didn't you execute on it? It makes you feel like you're certain and you should have been able to capitalize on it differently. And then it will make you feel more certain about more setups that are similar like that. So it's important to pay attention to how you're thinking about things and are you truly being objective to the situation? The risk specifically for day traders, it is dangerous because it feels like you're learning. It feels like you're saying this makes so much sense because of XYZ after it's already printed. So it feels like it's actually really helpful, but it kind of distorts everything because it distorts your self-assessment. It distorts the way that you are setting up your trades and entering them. Because when we enter a trade, we actually don't have any data for how it's going to work out. We can make the best educated guesses based on what we have learned, but we can't truly predict it. Hey, it looks like you're turning over to the green there in line. That's you're heading the right direction. And we've all had struggle periods. So that's why you've shown up to classes, you're showing up to live streams. Like we are all getting stronger together and having these conversations will help. Coach Matt and I, we have our trading labs and then we live stream with different coaches all the time here at BluSky. And there's a lot of value to be held in these conversations. So just patience with your journey. If any of these like are hitting a little too close to home or it's making you have some little flashbacks to when you have done this exact thing. I don't think there's a trader in this room who can't resonate with everything that I'm saying today because these are slippery slopes for a reason. And I think we learn most by falling into them and then getting irritated and then figuring out what we need to do to engage differently. So when you are having hindsight bias, a couple of the things are you can have this overconfidence creep. So you can replay a winning trade and convince yourself that it was super obvious. And then your perceived edge becomes inflated and your risk discipline loosens. So catching a really good move, it can make you have a strong feeling that you are very good. And some of it, and you are, right? We catch good trades because we're good traders. So do have measured confidence because as you learn and grow and you take more strong trades, you should grow confidence. The trick there is to not let it spill over into overconfidence where it's changing your trading system, where you are putting on too much of a percentage of your account on the line with each trade. And you are basically not honoring your risk discipline for your given account and strategy and the instrument that you're trading. That is where it spills over into danger because no trade is ever guaranteed, even if it works the last 5 out of 5 times. That is there is always a probability for a trade not to work. When we put on risk, the risk of it being stopped out is always on the table. So you got to be careful and not let the hindsight bias of a certain setup encourage you to oversize and overconfidence with those choices. Now, this flawed review process is the biggest with this hindsight, I would say, because it will color the way you review how you've executed on a day, like make it seem obvious. And if you're just journaling, you know that you knew XYZ, and so this happened and it was natural that it would. It's not necessarily holistic of the moment, because let's be real, every time we enter a trade, there's obviously multiple factors on the table that encourage you to put your leverage on the line. There are the confluences and the confirmations that encourage you to take it. It encourages you to be like, this is the setup. This is what I see. I see 5 things lining up for a bullish position today, and I'm going to wait for this entry, and I feel really strongly about it. Hence, I'm willing to put my risk on the line. But in that moment, we know that it is not foolproof. And so I love that at this point here about you want to journal truly the entire aspect of each learning opportunity trade and what actually happened and how you thought as you were entering it, not only the end outcome. Because like today, if we had a strong bullish leg up, pull up, and then a high base, a flag system out, in that situation, there is potential for that to break and it to fall down and make another lower low on the daily chart, right? That is absolutely on the table as a potential outcome for today's price action. Now, you could make an argument for it was more likely to be bullish because of XYZ. We hit liquidity zone yesterday. There was a strong move up. It was holding at that high base. And so you would want to watch for the breakup and catch the next leg potentially. But it has to always be in your mind of like, what is the bearish scenario? What would that look like? If this support level broke, there very well could be a strong short position. I would encourage you all to, when you're journaling, to think about this sort of situation and think about what was your rationale for getting into a trade. So was it, a 7 out of 10 confidence trade? What was the rationale against it? And always kind of be open to that objective data, because that will help keep you grounded in none of my trades are foolproof. Nothing that I do is guaranteed to always win. And when I'm reviewing it, especially on my killer trades, like try and just remember that I had, 5 reasons to take this long and 2 or 3 on my back end of what it would look like to go against me. So I want to make sure that I have my stop loss in place to protect my accounts. Pay for stop and let the runner do the work. There you go. It's just a trade mentality. Yeah. You got to keep level on it, right? And not give anything too much weight, because then you can put emotion into it and it can make you trade emotionally if you start letting the emotions creep into your decision, your review, each trade processing. You want to be as robotic as you can in the way that you are honoring your strategy and your system and your risk, because going over on it because of any of these biases and the way they nudge you to go a little more aggressive sometimes can put you in some kind of headspace that opens you up to risk. Now, it can also punish a good process, because a trade where you followed your rules but you lost, hindsight can make it feel like a mistake. You can abandon a valid strategy prematurely, right? And so sometimes a really good trade setup loses. It could just be the variance of today. It looked like a strong bull flag situation, and that is what it turned out to be. And there was another leg up today to be captured by those who caught the next leg up in this bullish day. However, had you got in for that bull move, and who knew there was just a ton of bears sitting on top of that flag, and it flushed and it wrecked you. It doesn't mean necessarily that your pattern on the read of that price action today was wrong, and that your process was wrong, and that the reasons you got into the trade were incorrect. However, hindsight bias can color it in a way that, like, how did I not know? How did I not know the larger time frame is bearish? Of course there's bears there now. I wouldn't want you to abandon a strong bullish strategy because of hindsight bias for the one time that doesn't work, because in that situation, it probably does work, 70% of the time with certain setups when you're patient enough or wait for all of that information to print. So this is how you want to, really make sure that you're honoring your process and not letting any sort of like view after the fact skew it one way or the other. Yeah. Hey, I hear you, Ace. I love that you had a killer day. Yeah. Never give up. And as a side note, just to play off of what Ace just posted in the chat about never give up, because Trading is not easy, and I think that there is a lot to grow through when you are really dialing it all in. And as I talk about a lot of these psychology conversations on Tuesdays, there's a lot of ways that our brain can get us into a little bit of trouble. We can start leaning into our fight or flight and our emotions and these biases that are very sneaky, that in the moment we feel like we're doing what's right. When we're revenge trading, in that moment, in the heat of that moment, we feel like we're doing what's right. When you are going hard and fighting with Miss Market, you want to win. You want to be correct. You want your bias to show and to prove itself. And when you start going down these rabbit holes, you get caught up in the emotions. And this is because you're actually a human and not a robot. And so the more we can have these conversations openly and acknowledge that there is risk in the way that our minds can take all of this, the more we will have some energy behind controlling it a little bit more each day. How about managing this one? So let's get a little bit more into that here before we move on. The core principle is that great traders, you want to grade yourself based on your decision quality, not your outcome quality. So it's not about the P&L, because you could get there by pulling some BS and really over leveraging and throwing a Hail Mary and trading because someone said something and they're smarter than you in your view. And so you just threw all your bullets at this one situation because somebody said it was good and you think that they know what they're doing. And then you have a great P&L. I don't know that needs to make you feel like you're a great trader, right? But if you have your own strategy and you wait patiently for, at least these 5 criteria to show up, and then you execute when you get your entry signal and you manage it as planned, that is a really strong grade. You need to get an A on that for your decision quality. So a losing trade that was taken correctly, it's a win because you're honoring your process and what you've studied, what you understand. You did not full port anything, because that's not actually how we manage our P&L as consistently profitable traders, right? But a winning trade that was taken recklessly is a red flag. It's a warning, because if you took that reckless trade by full porting it based on RQ, we'll blame you, and you won, that might make you want to do it all the time. And maybe RQ's having an off day where he really didn't sleep, nor did he get coffee. And he just didn't happen to nail it that day. But it worked when you copied him the last 3 days. So going forward again, it could be a day where you give back all 3 of those gains because you were making a reckless choice and you've allowing those habits to be part of your system, right? So it's good to write your trade thesis before you enter your trade. I don't know if everyone does this, but it's good to have some sort of process, whether you handwrite it on paper or you have a document where you write it, or you even just make notes right on your chart with like the adding text symbol drawing tool. But if you write your plan of like a bullish move because we're having this strong structure, a breakup would be this pattern. It would look like this, and I would like to honor my risk on the 5-minute chart, what have you. Writing that up before you enter, and then noting what happens afterwards and saying, I saw this before. This is what I did. This was the outcome. Next time I could fine tune it, XYZ. Then you're being a real honest witness to your trading. And by honestly witnessing your trading system, your strategy, your approach, your management, that gives you the most real data. Like it shows you what the actual situation is that you are engaging with, and where you're at in your trading, how you are honoring your system. Is your system working consistently? And if it's not, how do you need to manage it? So doing these certain things will help keep you real, honestly. It will give you real-time information on what you're thinking in the moment. And then you can grade your process over your P&L, right? And then that is how you get a stronger process. Because if your P&L is whatever the heck it is, what matters more for the long-term trajectory as a trader is if your process is strong and you're honoring it. Now, if either one of those issues is not happening, you're going to not be consistent, is kind of just the truth of that. If your process isn't strong, you need to drill into that. You need to drill into your trading strategy. You need to attend, Matt's technicals on Thursday and all the sessions that you can to get the strongest system that you can create with the resources that you understand and that you have access to. Because a strong strategy is essential to being a profitable trader. But then on the backs of that, a strong strategy means nothing if you don't honor it, which is just kind of like the truth, right? Which I don't mean to hurt anyone's feelings, because I have absolutely broken my rules more times than I wish to admit, but I've regretted it. I've regretted it when I won because it fed into bad habits, and I've regretted it when I've lost because the pain of that regret sucks. Like, it sucks bad. It sucks like way more than discipline, taking a stop out and then shutting it down for the day, because that's what my system dictates if I'm not understanding the market context well. So I think that that's two-part is how you can manage this. Have a strong system and then honor it, and then grade yourself appropriately based on what you're doing with those two things, and then lean into that, because that really is a recipe for success in the long term. And it's not realistic to expect that of yourself in the first many months or even the first couple of years, because everyone is different on that time frame with what needs to sink in first, and then where you need to spend your work, and what sort of mentors you can kind of get guiding you that encourage you to make the choices to honor all of that. Anyone have any questions on any of this? Those are the first two, the recency and hindsight, the ways that our mind can mess with us. Okay. The third bias of the day is confirmation bias. This one is very prevalent in trading, as all three of them are, but this one is a biggie too. I don't see it to believe it. I believe it, so now I see it. So it's kind of putting the cart before the horse, if you can think about it that way. So confirmation bias is the tendency to seek, favor, and remember information that confirms what we already believe, while dismissing the information that contradicts it. So basically, you want today to be bearish because you had a long conversation with someone yesterday and you said, you know what, we are breaking lows, we are getting more aggression, more momentum behind these bears, and we are falling. So I see the bears as the powerhouse. I don't know what anyone thinks when they're thinking there's going to be bulls today. We are in a bearish market, and we are breaking down, and we are pushing hard. So I am looking for shorts only. So then when today's market opened, every single time we touched a level above, you could see that as resistance. And every single time on the 30-second chart, it started wicking against it. That could be a sign that there's the sellers. That's where we're falling. You can look at the chart, even on a bullish AF day, as today was, and just be watching every single level for the bears to take control, because you are waiting for data to confirm what you believe to be true. So that is confirmation bias. This analogy here, think of your social media feed. The algorithm serves you content that reinforces your existing views. Your brain does the same thing. It's your built-in algorithm. It's running 24/7 in the trade room. So I don't know if you guys have found this, but when you look up certain news stories or you follow certain people on your social media, it labels you, right? Our feeds label us as, a certain political parties, certain types of traders, certain types of friends, certain value on certain people on social media, and devaluing other people on social media. And then it will feed you what it should think you would want to see. That algorithm was designed to work with confirmation bias. It wants to feed you to make you feel right, to make you crave more of that. It's psychological effery, where it's just wanting to rope you in deeper and keep you entrenched in all of it. Aww. I mean, maybe now you're really good at your makeup and you gotta get off that feed, right? Confirmation bias it's really hard because it can take hold in a way that you cannot catch it until way after the fact, and after you've gotten into a lot of trouble with it. And I know that because, again, the things that I talk about in the psychology class, I have learned pretty much all of them the hard way and work through some of them still often enough because I'm still a human, turns out. So as a day trader on this one, this confirmation bias, once you have a directional bias, your eyes, your charts, your data, it all works against you. It all feeds into the risk of it. So in this trade, you will cherry pick your signals. You will, if you're bullish on NQ, every bullish indicator is going to stand out to you. Every bearish signal is going to get rationalized away. So your analysis becomes a sales pitch, not a trade plan. You're right on that, Matt. You're right. So does that make sense, right? Cherry picking your signals, because we all were taught and lean into and appreciate the energy of different chart what's the word? Indicators, sorry. Different chart indicators. Some people really learned, the RSI or a VWAP or a moving average that feels really strong. And for you, that one is the leading indicator that you always lean on. Well, depending on what your strategy is, there are many that work well in the market. Just find what works for you. But most people have at least a couple. Some people trade naked charts, and I love that. But if you, in this situation, if you are looking for at least 4 signals to go long, and you're getting maybe 8 things on the chart that you look at to create your bias for the trade that you want to get in. Well, if it's like 4 and 4, you're going to overweigh the ones that are what you think will happen and underweight the ones that you don't think will happen, because you are seeking confirmation instead of holding objective open to which wherever it can weigh. And I would argue that if you are looking for, you maybe grade 8 specific things in price action and this and this and this, your EMA, whatever. If there are 8 different things, for example, that you prioritize to look at before you decide on a trade plan, if you are getting 4 and 4 for bears and bulls, I would argue that's a moment to not enter the market, because there is indecision at best, confusion, gray area, messy middle, not your ideal setup. But also remember to not be biased in that moment if you can, because seeking to overemphasize the ones that support your confirmation and underemphasize the ones that you don't prefer that day because you want to be right is not helpful. Now, ignoring the contradictory data, that's what I'm talking about. So volume divergence, a key resistance level, a conflicting time frame, they can become kind of invisible to you when you're stuck in a confirmation bias rat race kind of deal, and they can feel less important to your preferred narrative. Now, having a preferred narrative, you can have a bias based on the market. Like, we all create a bias on what the market is telling us to do, right? We factor in the daily trend and where we're encountering resistance and support and like what has worked for us for a long time. It will give you a bias on which direction is the leading. Like, everyone who saw the charts today, like, there was a lot of bullish bias because we're a lot of real good traders. But you want to remain objective and just wait and see and give it time. And you don't want to devalue the alternative. You can have a bias that is correct. You could have had a bullish bias today and sought confirmation on it and been right. But I would just warn you to try and approach it with an objective lens versus, I want to only see what looks for bullish, and I just want to be right. Even if it's a 9 EMA, don't holistically trust it if there's a lot of conflicting data. You heard it here first. I'm sorry, Coach Matt. I love everything that you teach, but I would like to warn that, one golden indicator is not the end all be all of throwing all of your contracts at it. Beware of echo chambers. Now, I know that we all have mixed feelings about social media, but I think a lot of people, as you kind of grow in maturity, you realize that there's not a ton of value there necessarily. I would say that definitely different coaching or different trading environment and spaces can become echo chambers, and you can get into trouble with that. So just kind of bear in mind and be careful who you're surrounding yourselves with, because you want to be around traders who are objective, patient, reasonable, supportive, informative. Yeah, good point. So following only traders who share your market view in chat rooms or social media reinforces your bias loop and cuts you off from a perspective that could save your trade. So it is much more ideal if you can have people in your ear that are not saying, I don't care what the market does today, there is no way I'm going to buy this market because look at how low we are and how we're pushing down low at the end of yesterday's close. I'm a perma bear. I like bearish trades. I really have made more money as a bear over the years, but I know that I'm actually on the wrong side of the market because look, zoom out. It is overall making higher highs and higher lows. The stock market is going up since its inception. So for me, I try hard to be in the opposite of those echo chambers because I want to stay real and I want to make sure that I am always considering both sides of that, because I actually really like taking bullish trades because it helps me reinforce that side of myself that wasn't as intuitive just because of who I am, how I started to learn. My first really early big wins were on bearish trades. It just sort of colored it for me from the get. And I purposefully try to keep people around me that are objective and agree that following a trade plan and honoring your system is priority number one, and not leaning into a bias and full porting and going extra on risk management is not stable or the plan. And so having those sort of rational people around you and in your community is going to be stronger than any sort of echo chamber or noise, honestly. A lot of rooms are noisy, but not helpful. And are at worst are actually damaging you in your trajectory as a trader because they are encouraging you to lean into biases that are not always right. So let's not do that, right? How do we manage this? So with some things we haven't already talked about, but I love the idea of having a checklist before entry. So like I have mentioned a couple of times, you can have the way that you rationalize out a trade. You need to see a certain pattern and it needs to fit in the market context for the day. And then you have to have price moving in a certain direction and giving you an entry criteria. So have that checklist before you get in. Have it written out in your trade plan, in your trade strategy playbook, that when I want a bullish trade on a trending day, I want it to break out above this level, close above, come back, settle out, give me a flag, hold support on VWAP or a band or an EMA, and then break higher on whatever time frame you're trading on. So that sounds like a pretty reasonable checklist. You could add more to it. You could even strip that down a little bit. But you don't have favorites. You don't lean into intuition by saying, if it feels really bullish, then I'm probably going to buy. But that checklist will be more powerful because it will pull out the guesswork of it. And that will allow you to be more objective with the data and less focused on confirming any kind of bias. This second one I love, which is seek deconfirming data. I don't know if everyone does this. I try to always do this and I trade way better when I do it, which is actively looking for reasons the trade will fail, which sounds kind of counterintuitive, but it's smart because you're basically saying, I really see the longs. I see the longs in almost everything that I see. How could I be wrong? What would it look like for me to be wrong? What would it show me? How could I protect myself if I am wrong? Is there anything on my chart that should give me pause in taking this long position? If so, how much value do I give it? How do I deal with that information? Is it, 20% of the data is bearish? And so then I'm going to respect it, but I'm going to say I'm going to go with the 80%, right? Yeah, paint both sides. Exactly. I think this is a really valuable technique in terms of confirmation bias, but in terms of your trade plan is to literally, before you enter a trade, always, always, always have it be a part of your practice of if I'm going long, what are all my bullish reasons? Before I enter the trade, what would a bear trade look like? And that has to have less support in order for you to even consider actually putting your risk on the line for that bulls. Now, this steel man opposing case. So this is another way to even go deeper into that. And that's right to the counter trend, counter case before entering. And that's basically like if you're considering an important choice in life, having a pro and con list. And so that's what the opposing case is. For my pro list for a bullish move, I see these 6 things. For my cons, which is a bearish move, I see these 2 things. I feel pretty good then. Let's see about this entry and get in this trade. If you get 4 and 4, that should trigger a pause for you. That should be like, I really don't love this situation. I would much rather have at least a 6 and 3 on my pros and cons list. So consider your opposing case. And if you are still dialing in your strategy list, write it out. Like even just a quick sticky note on your desk as you're getting into it, because that could allow you to scale in potentially full size and scale out because you really have fully considered it and you're being patient and you're taking time to write it down. I don't know if everyone has heard this, but when you're trading, if you pause to write something down, it just slows you down a little bit. And I know as day traders, time is of the essence, especially when a trade is setting up and our entry criteria is upon us. But to slow yourself down a little bit and to use your pen and paper to actually scribble a couple quick notes, abbreviations are fine, but it does pull you out of your emotions a little bit, puts you into your body a little bit by using your hand and that pencil. And it makes you critically think about making sure you're being intelligent. I know we can't pause the price action, and sometimes this is not ideal. And if we're day traders, which a lot of us are, 1 minute is a factor. But I do think that there is generally 1 minute to quick jot down the situation, especially when you're still drilling in your strategy and your playbook. And then pause before sizing too. So extra conviction, it does demand extra scrutiny. If you're having a pro and con list where it's 8 in the line of bulls and 2 in the line of bears, that feels real good. That feels like a very convincing pro con list. And so maybe that is the situation where you scale into full size and knowing what it looks like for your account, what percentage of your account is, or, an unfunded account, how much that is. But on those high conviction outcomes that you fully considered, sometimes you want to put all your energy into an excellent trade. And we get excellent trades. And so being able to fully capitalize on that, I love that for us. I love a big winning day, and you don't get a big winning day if you don't size appropriately for your big winners. But the flip side of that is size appropriately for the not quite perfect entries. Which in a perfect world, we won't take a trade that isn't perfect, but also maybe not every day there is a perfect trade. And maybe you're a younger trader, and so you don't have strong conviction for every single trade yet because you're still a little bit unsure about what to give weight to. In that situation, you really should trade to start figuring it out. But in that situation, trade smaller, because if you don't have the years of experience and a steel-clad trade plan that you can say, this is a high conviction trade, let's go. But instead you're like, I'm pretty sure this is a high conviction trade. I just wrote my trade strategy 2 days ago, so this feels like a 10 out of 10. But you just wrote your trade book, draft 1 on Saturday. Maybe you do half size and you feel it out and you allow that to help shoring up your system. There you go, Coach Matt. He took one today where he wasn't sure about his time. He didn't love it, but he saw the trade and he loved the trade. So he took it, but with a smaller size because he couldn't get his high conviction entry criteria. He didn't get the best risk to reward on where he got in at, but he still got a piece of the trade. You leverage down when you can't get that sick entry. Say you saw it flagging out and you saw it break out. You didn't get right in at the breakout, but in that setup, there's a whole leg that is happening after that breakout. So I agree absolutely with what you just said. Yeah, because your stop is a position where you still, if it goes against you, you're not going to have an outsized risk by not getting that ideal entry. And so exactly, pause before you size and gauge. Can you nail this entry? Then that's also an argument for doing the full size, because where you get to put your stop loss is within your threshold for your risk. So factor all these things in when you're getting into your trade, because the goal isn't to eliminate conviction, it's to pressure test it before real money is on the line. So you want to basically pressure test your system by trading it, but by judging the heck out of the trades and trying to think about all of the aspects of it and how you best can deploy your capital. You want to trade your chart, not a story about the chart, right? Lean into the data. Ace says, I've adopted Jesse Livermore's strategy of doing a feeler of a position and then adding on confirmation. Yes. Okay, Ace, I do that. So I will, if I see a trade setting up, I will get in my ideal entry with half size. And then as it's getting more and more confirmations in play, it starts to play out. I can add the other half of my full size because I have that additional confirmation. But when recognizing that I'm adding that size on, I need to adjust my risk and make sure that I'm still only accepting the risk for my account. Secondary confirmation. Yes. Okay. It does help on timing because you can trade or you can add. You can basically gauge it as the data is presenting. So you are leaning into objectively what is happening and starting with a size that is reasonable based on what you know at the time. And then you flow with the market, which is staying super present, not just, going all in on a hunch. Instead, easing in and making sure that it's continuing to progress and make sense for what you got going on. Now, there's some overlap of all of these, right? The core of it is that our brain has biases and it will lead us down the wrong rabbit hole should we let it just go about its business without checking it. They generally don't operate in isolation. A lot of these, you can have 1 to 3 of these in every trade setup that you are operating in. And they can make each other worse, basically. They can make you start trading on feeling versus on data, which is essentially what it is when you're trading a bias over trading the information. And recognizing how they factor in, how they creep up on us, and how they interact with your edge, with your execution is how you can kind of really dial in and succumb to them less. I think a losing streak can give you some recency bias about you're not really doing that great on your trading and you're frustrated. That can make you kind of desperate for a winning trade. You find a setup and you convince yourself that it's obvious. Confirmation bias. Of course, this is the one, XYZ. Now it's going to happen. But then when you lose, you knew it was risky all along. You have hindsight bias. Of course, I'm still losing. It all just plays into itself. You can overvalue a confirmation bias because you're so desperate to win. Well, that desperation came from the losing streak, which is a recency bias instead of just my last couple of trades haven't worked out. Doesn't mean that I don't have a strong system and today's going to be a great day. But coming into it with that carryover emotion from that recency bias on your trajectory can give you a little bit more of an emotional judge to the opportunities right in front of you. which can create the confirmation bias when you're trying to see something and you're desperate for a win. You're going to put more energy into thinking you see the best case scenario because you need to turn it around. So that desperation can increase the riskiness of other errors, which could be any one number of these, biasy energies behind your trades. I think they feed each other and the loop is fast and expensive. And so we really just want to settle in and disengage from all of that, right? So here's a checklist that I kind of pulled together from all of this as I was digging into these different biases and what we can do. And I think that this kind of pulls together a lot of actionable ideas that maybe most of you have a lot of these in your trading plan, your system already. But I would definitely just think about if you do, if you don't, what you could do to make sure you are highlighting all the aspects of your trading strategy. So make this a part of your pre-market ritual, your pre-trade system. Awareness is important, but you want to make this a part of your system, your expectations for yourself, your requirements for how you're going to execute on your system. Now, a lot of that, let's start with just zooming out. So that basically is you want to have larger time frame data before you have a narrative. You don't want to let just yesterday or the last hourly presentation be your only data. And now this can go for your trading trajectory, your equity curve as a trader, as well as the actual candles on your chart. Basically, you want to factor in all of the data that led up to that. And of course, you want to weigh the most recent a little bit more heavily because in that situation, it's the current price action. That's just the nature of the beast of your trading this session. So you need to be most acutely aware of what's going on right now, but also what led up to it. What is the larger market context trend and where are we at within that time frame? So giving it a lot of credence to all of the data basically leading up to where we are. Now, write first, trade second. This one I think a lot of traders don't do, or they tried it once, or they are inconsistent with it. But I would encourage you to try it, especially if you are still fine-tuning your process as a trader and your consistency. This will only help by writing notes. Now, it can be a thesis that is a page and a half. You can write out questions in advance and then fill them in. I did that for a few years, and I still do it at times, where I say, I want to consider what is the larger time frame, what is the context, how is my data trending, where are we at in comparison to yesterday's value, which levels are key for me to lean against in order to trade in a certain direction. So if you literally write that down before you enter a trade, it will put you on a more even keel and a stronger base for the objective data, because you are literally saying, where are we in compared to yesterday's value? Are we bullish or bearish? Next, what am I going to look at? I want to look at what the hourly chart, are we breaking highs or are we breaking lows? Write it down. I would add to that your emotional state and steadiness, because if you are sleep deprived because something's going on in your home, your brain doesn't fire as well if it is not fed, watered, and rested. That's biology. And I know a lot of people do a lot of magical, wonderful, incredible things on low sleep and low nutrition, but your literal biology says your neurons fire at their fastest when they are rested and hydrated and you have some decent nutrition in your body. So don't totally devalue that. And if you want to make sure that you are steady with your psychology, and you can write out your trade plan, slow it down a little bit, look at your data before you put your risk on the line. Argue the other side. Now, this one is the most applicable point on this entire presentation that is directly applies to combating biases that we have. For every bullish setup, write the bearish scenario. For every short, write what it would look like for a good long. And then you factor it in. You have your pro and con list for every trade, and that's a part of your decision making. And 100% Amaro coffee counts. I mean, don't go super cheap, because then it's just kind of gross. But I think that coffee, I enjoy my coffee every morning. But also throw some water in there. That's just, a little Nurse Becky advocacy right there. Throw some water next to the coffee, not only in the coffee, because that is different. But argue the other side, you guys. Try it. Try to specifically argue the other side every time you enter a trade. And it just will force your mind to pull to the data instead of living in the I wish, etc., etc. The pro and con list requires you to consider the cons instead of just trusting. And then grade the process. At the end of the day, score your decision quality, not your P&L. You can do a simple 1 to 5 scale, honestly, because winning streaks can hide bad habits. That's just the truth. Yeah, winners do have the advantage. Lawyers, because they probably constantly are weighing all of the sides of the case and factoring in every bit of data that they need to, and considering the worst case scenario if something comes out of the woodwork. Do that with trading. Like, you're putting real money on the side, your heart and money and energy and capital and mental sanity with every trade you're put on. That is a little bit in play. So you owe it to yourself to do the best process that you can. And I do think that this is a strategy of trying to be the most steady that we can. All right. So the mindset shift that is super important. We don't want to be reactive traders. Reactive traders trade feelings. They let the last outcome define the next setup. They seek validation, reviews your results, but not your decisions. That's impulsive and not thoughtful. But a bias aware trader is going to try their best to always trade the plan and have structured rules to filter out the emotions and say, I might feel some kind of way, but if I don't get this pattern that is my entry criteria, then I don't enter. And then seek the deconfirmation, seek the other side of the coin, and then focus on your process. So I do think that this is a powerful approach. I know that it is not easy first several times, but I do think that this is the stronger approach if we can kind of dial into it, because there is uncertainty in the market. And your process can be steadying in a world where there is uncertainty and volatility and there is risk. If you have the strongest system, then your process will hold you down. It'll help you be more stable. And being aware of the biases that you might have in any given moment is, it's a bridge to being less reactive and more professional. So that is what I got for you guys today. I think that this is, important thing to think about. These biases are a part of who we are, a part of our humanity. And you don't want to ignore them. Instead, have awareness on them. Coach Breezy had a great point about awareness earlier today. And I think that's really powerful, of staying aware about what's going on and then thinking about what we can do to counter it so we can set ourselves up for success. Now, Coach Matt put in the comments here about our BluSky podcast. We recorded it live in BluSky in the Discord with you all yesterday, which was super fun because we get to watch the chat and engage with you guys, take real-time questions. You guys are on our team. I think we have a really special group at BluSky because everyone is really dedicated and kind and respectful and is giving important information and sharing our knowledge and our approach together. And so that's really valuable. And just, give us a little extra love on that YouTube recording, because it will help kind of bring attention and bring more good people to our community. And that is really great because I think it's pretty cool around here. So please do subscribe, leave a comment. And then Coach Matt is having his technical lab, on Thursday at Power Hour after Power Hour market close. So you guys want to catch that one. Do you guys have any thoughts, questions, any last minute input about the biasy conversation? Yeah, Coach Matt, let us know if you need any help. Seriously, reach out to us at any point. We are always available in the chats or DMs, and then we live stream every day in the Discord. So, Jaja, oh no, when you feel attacked, it was honestly, that's my job. I'm pretty sure literally it's probably part of my contract that I just forgot to read, but it is to figure out what we all need for our psychology to try and make us as steady as we can. And these things hit home because we've done them. I've done them. And so it's easy for me to pull in the information to even understand even more for my own self when I'm putting together these presentations. So I appreciate that point because it's really good, Jaja, that when it hits home, it's something that we could stand to shore up a little bit on. So you're welcome. All right, go team. I'm very thankful for you all. It is Taco Tuesday, and Amaro made a good point that it also could be Tequila Tuesday, but safely and respectfully and whilst not trading is the name of the game. So thank you so much for hanging out with me and Power Hour, those of you that were there as well. Take care, everyone. Trade safe, watch your risk. Let's have a great rest of the week. I'll see you guys tomorrow. Bye.